Moving now to Asia, where stocks traded mixed today, with some markets losing steam after initially trading higher on the back of Wall Street's earnings-led advance. The Nikkei 225 slipped into negative territory after gaining during morning trade, with the index last lower by 0.11%. Over in South Korea, the Kospi edged lower by 0.19, despite large-cap tech stocks advancing. Hong Kong's Hang Seng Index hovered around the flat line as financials and energy sector gains were offset by declines in industrials and consumer stocks. On the mainland, the Shanghai Composite shared 0.54%, with Thursday's declines coming on the back of 4 consecutive sessions of losses. Elsewhere, Australia's S&P ASX 200 advanced 0.43% as industrials and heavily weighted financials rose. And to the global oil market, prices were mixed today as the market struggled to digest signs of strong gasoline demand in the United States, the world's biggest consumer of the fuel, with a statement from oil producers that they are putting more crude on the market. Brent crude futures fell 11 cents to $72.79 a barrel. West Texas Intermediate crude futures climbed 6 cents to $68.82. Both benchmarks rose by 1% on Wednesday after inventory data from the U.S. Energy Information Administration reported on Wednesday that U.S. gasoline stockpiles fell along with supplies of distillate fuels. Well, for more on the global oil market, here is Aisha Sani, one of the research analysts with Financial Derivatives Company, joining me here in the studio. Hello, Aisha. Good to have you on the program.
Thank you for having me.
Well, we're seeing the oil price volatility increase for about, that's Brent trading 9.34% below its 2018 peak. Now, do you expect it to recover, or we're going to be seeing the slope going downwards?
Well, we're looking at this volatility in the oil markets. It's expected because as a commodities market, trading in these commodities markets, you have a lot of volatile prices. And another characteristic of this market is that it is an oligopoly, and this also influences price because you have price leaders, countries like Saudi Arabia and OPEC and Russia outside of OPEC. And when we come to the question of whether this price will recover in this recent period of price volatility, we're talking about the high prices of close to $80 per barrel that we were seeing as a result of disruptions in Libya, Canada, and Nigeria, which then fell sharply to close to $71 per barrel because of Libya resuming their crude oil exports. And when we ask ourselves why, whether these prices will recover, we look to the fact that they have recovered marginally already because currently they're trading at around $72 per barrel. And it is very unlikely that these prices will continue in a downward slope.
All right, so what does this mean for Nigeria's dollar and fiscal revenue?
Well, oil and gas comprises 92% of our exports. And currently we're seeing a price drop of around 9%. And as well as the current fall in production, we are seeing challenges to both our fiscal and dollar revenues. However, concerning our dollar revenues don't only come from oil. They come from other exports. We have cocoa, from which we get dollar revenue from. And we also have international oil companies that provide us with dollar revenue. Therefore, although our dollar revenues will be impacted by this price drop, they will not be impacted so significantly. Rather, our fiscal revenues will be more impacted because crude oil export revenues fund our fiscal revenues.
Okay, now Shell recently lifted its force majeure, and Nigeria's production is expected to rise by 150,000 barrels per day. Now, is this sufficient to perhaps compensate for the price drop?
Looking at Nigeria's oil production, it's currently at 1.6 million barrels per day as of June, and 150,000 barrel per day increase indicates a 9% increase in production. And looking at the 9% price drop, it is likely that this increase in production will dampen the effect of the price drop on our economy.
Right, we've seen the escalating trade war between the U.S. and China, and how will the oil prices be affected, and what would that also mean for the country?
Well, China is the largest consumer of U.S. oil, and it also consumes it's one of the largest consumers of energy worldwide. And therefore, if it imposes tariffs on U.S. oil, we will see U.S. oil become more expensive and therefore less attractive to Chinese consumers. Therefore, there will be a decrease in the amount of oil that is imported by China from the U.S. As a result, we will then see an increase in the amount of U.S. shale on the market. And an increase in supply of oil is bad for oil prices. It brings them down. And therefore, this will have a negative impact on Nigeria, who has crude oil as her major export, a source of major export revenue. And additionally, the trade war also introduces recessionary pressures into the global economy. And this would also have a negative impact on Nigeria.
Right, thank you very much for your time, Aisha. Aisha Sadi is one of the research analysts with Financial Derivatives Company. We'll move on now. In Kenya, High Court has temporarily suspended a Robinhood tax of bank transfers of over 500,000 shillings, which was imposed at the beginning of this month. Finance Minister Henry Rotich introduced the so-called Robinhood tax of 0.05% in his budget speech last month. It was introduced on July 1. And Kenya will launch its International Financial Center in the capital, Nairobi, later this year to attract large foreign financial firms and boost capital flows. The government of East Africa's biggest economy has been working with Qatar since 2014 to build a financial center in Nairobi that mirrors Doha's International Financial Center. The Kenyan official center is expected to compete with other established financial centers in the region like Mauritius. Despite Kenya's relatively developed capital markets, 75% of all business financing in the economy was from the banking sector, while the balance came from the capital markets. And Namibia has secured a $218 million from the African Development Bank, the second tranche of a $250 million facility from the developed lender to help the country finance its budget deficit. The Southern African nation's economy contracted in the final 2 quarters of 2017 and by 0.1% in the first quarter of 2018. Its credit rating was cut to investment late last year, but Fitch over concerns of a deteriorating fiscal position. And when we come back, commuters travel on the newly launched light railway in Nigeria. Do stay with us.